Hey everybody, Russell Gray, co-host of the Real Estate Guys radio show for another edition of Boots on the Ground. And we're going to be talking about something really interesting this time that grew out of a radio show that we did with our guest from the retail real estate space, Michael Flight. Hey Michael, how are you?
How you doing, Russ? It's great to see you again.
It's good to be seen, even though it's only virtual, but we're starting to get back into the real world. But as we're sitting here at the beginning of November 2020, we don't know what the next administration is going to look like. Maybe by the time this thing gets out, everybody will know. It may or may not make any difference. A lot of what was going on in retail happened because of Amazon and technology, and there was a lot of things, and COVID-19 came along and became the great accelerator. You were standing at the epicenter of that, a lot like I was in the mortgage business back in 2008, and you got wiped out, kind of, maybe not as badly as I did. In fact, I know not as badly as I did, but definitely some hard times. And so you found a way to combine old school retail real estate with cutting edge blockchain technology. And you wrote a report for us on that, which we're going to refer to in the show notes below, or people can get a copy of that by sending an email to token@realestateguysradio.com. We'll also put a link to the show notes or in the show notes to the podcast that we did on that so people can hear that. But just for context, just tell everybody kind of your basic concept of what you're doing, combining retail real estate with a blockchain.
Sure. And let's back up about 3 years ago. Number one, we saw that there was disintermediation in retail real estate, and some of the stuff was going online. Other things were evolving where they weren't going to be in business anymore. Let's name Sears or Kmart or some of those guys. And, some of the replacement tenants just weren't like quality replacement tenants. So even 3 years ago, we started taking a look at, what is the best way to move forward and what is the most stable tenants to move forward with, and how do we do that? And so we kind of migrated and followed our tenants out of malls, because we did malls, we did demalling. We followed them out of strip centers. And, we kind of stuck on, one of the most stable and, occupied, tenancies right now are single tenant net lease real estate. And so if you took a look at between 2009 and, 2019, the average vacancy or the average occupancy rate was 97.5 to 98.5. Super stable, guaranteed by large corporations. And so the other thing is we looked at what tenants were less likely to be disintermediated, and it was services, and it was essential business retailers is what we're calling them now. But so medical.
A term that didn't exist
Yes,
right a year ago.
exactly.
Amazing.
Exactly.
Essential business retailers. Okay.
Right, but we had already set up our portfolio and what the industry types that we were going to put in the portfolio before COVID happened, and then it turned out that these industry types are also COVID resistant as well as internet resistant. So combine that with around the same time, the ICO craze, cryptocurrency craze, and at the time, I saw like prices on cryptocurrency just shooting up through the roof. And I was talking to people that knew what they were doing. I'm like, there's nothing behind this. I mean, it's software. So, what are you actually getting when you invest in it? Why wouldn't you just take and put together a stable coin, and just like slam it into, real estate, and then boom, you've got like something very stable. And then I said, why wouldn't you take a bunch of super stable properties and marry them all together in a portfolio, and then you get a super stable coin? And then as we started going down this rabbit hole, we found out that we qualify as a security token, which is a regulated security, and it's not cryptocurrency, and it's not an ICO.
But it's built on the blockchain, and it has those same types of not privacy, but security. It's like they talked about taking titles to property, notes, deeds and things like that, and creating a place where they could be stored, but they couldn't be stolen or altered because blockchain technology prevents that, because it's kind of a distributed. The way I understood, the way I had blockchain explained to me, it's like if you had like $100 bill and you made a copy of it, maybe 5 copies of it, and then tore it up in 1,000 pieces and scattered it to the wind so that there was redundant copies of every piece. And so that only the person holding the code that called all the pieces back could reassemble it, kind of like a Star Trek transporter that disassembles your body and puts it back together again. But because of that, it's extremely hack proof. Is that kind of the same thing that we're talking
No,
about
so
here?
it is absolutely the key thing is the blockchain technology, which, had been, kind of invented and then perfected with Satoshi Nakamoto putting out this white paper on Bitcoin. And what people figured out was we've had ledgers for, thousands of years. This is a triple ledger. So it's not only, it's like there's one entry, and then that entry is confirmed by other computers, and then those entries are confirmed by all kinds of computers throughout the world, so that one person. So the big thing with, like, when people were stealing songs and stuff,
Yeah.
you could make millions of copies of the same song. With the blockchain technology, the way it's written, it's like one single piece of information, and only one person can control that single information.
Okay, so that's great. For, again, you're talking to a guy that, heard about Bitcoin like in 2012, and I went to a conference and Jeffrey Tucker was there talking all about it.
Oh, and I know
And I
Jeffrey's
was
a great guy.
sitting in the audience trying to understand in my old age, and I didn't get it because it was being described as an asset. It was being described as a trading vehicle. And to your point, I was like, God, there's nothing behind it. Right? Why wouldn't you rather own an ounce of gold? And
Right.
so I went out to a sushi dinner that night. It's a big joke, right? I spent $150 on a sushi dinner that night with my partner Robert, and had we taken $100 and just had a $50 dinner, put $100 into Bitcoin that night,
Right.
when it hit like $20,000 a coin, it would have been worth like $72 million. It was
Yeah. Yeah.
ridiculous, right? And so, but what woke me up when that happened was, why did that happen? And so to me, what I saw was that a lot of people who didn't have another way to get money, rich people who didn't have another way to
Right.
get money out of areas of the world where they were in, that wanted to get money out, it was a vehicle. And I started to understand the portability, the security, the privacy, although I'm not so sold on the privacy component of it. But then I began to understand what you're saying. So if I can just reiterate for the sake of myself and anybody who's
Sure.
like me that's a little slow on the uptake, what I hear you saying is that the blockchain technology creates a electronic form of documentation, if you will, of whatever, of
That's
ownership
correct.
of something, or a unique coin. It's not a physical coin or a printed coin, but it is a collection of data that unique, 100% unique collection of data is one unique coin. And to make it stable, the idea of making it stable means that you take it and it's not just something that sits out there by itself, but it's actually backed by something that's real. So they've talked about making stable coins out of backing it by dollars, stable coins backing it by gold, stable coins, in your case, backing it with real estate or a pool of real estate. But if I were to put on my syndicator hat, I would say, okay, so if I go to buy, or somebody who's just buying shares in a company, if I go to buy shares in IBM, I'm going to I'm going to buy my shares from my stockbroker. I'm not actually going to get the physical stock certificate that is the evidence of my ownership. And really, neither are they.
The stockbroker doesn't hold it.
The
It's held
stockbroker
by this
doesn't get it.
company in New Jersey.
It's on a ledger
Right.
at IBM, and
Right.
it's at a ledger at the stockbroker. And then the stockbroker owes you that stock.
Right.
And so you have a lot of faith in them not failing, counterparty risk and all that, but that's beside the point. But the concept is your ownership in this thing that's real, called IBM,
Right.
is evidenced by these electronic ledgers that synchronize.
Right.
And so what you're saying is blockchain is exactly the same thing, but it takes people out of it, and it takes the ability of people to be able to steal it, counterfeit it, snoop on it, largely out of it. Is that kind of right?
Well, yeah. The key thing is that you hear a lot with trustless. So you don't have to trust IBM. You don't have to trust one central server. And the really cool thing about this is
Because
it's
these
not,
computers self-audit.
right,
If
and
you've
it's
got the
world,
one key
right,
that everybody comes to, then they all affirm, yeah, that's real. Yeah, that's real. No,
right.
it's
And the really cool thing is it's worldwide. So the other thing, putting your syndicator hat on, yeah, I'm sitting here in Chicago, you're sitting there in Arizona. We could decide to put together a syndication, and we could get people from Africa. I was just in Dubai last week, and everybody in the world is really excited about this technology because they believe that most financial assets are going to move on to the blockchain over the next, 10 to 20 years.
yeah. Well, yes. Currencies,
Yes,
stock certificates, or ownership of shares of companies.
right,
The idea that the blockchain technology will not just be blockchain like a coin that's made up of nothing that is just unique because it's unique, but actually will represent something in the physical real world that's of value in the real world.
right.
And
So big,
so that makes a lot more sense to me. But here's where I think there's a big opportunity, and I know you see it, but I spend a lot of time looking at what's going on in the world. When I looked at what happened to Bitcoin in the big boom, and I could track, and I'm not, if anybody's watching this that are like really Bitcoin experts, I'm like, this guy doesn't know what he's talking about. I admit it, I don't know what I'm talking about much. But what I have observed is that when it spiked, they put it on the futures market, and that moderated the spiking. And I think that that's why they did it. Right? That's the whole purpose of the futures market, is to moderate the price swings. And then the second thing is that the other spikes occurred when you could see certain regimes implementing capital controls, and people couldn't get their money out. And if you're scared of what's going on in your country and you're trying to find a way to get your wealth out, the blockchain was arguably the safest, fastest, most private way to do it compared to anything else anybody had. And so now I look at this and I say, okay, people who want to get their wealth out of unstable countries, even though they've made a lot of money there, or totalitarian communist type countries where private property really belongs to the state and you're just allowed to use it and they can take it away from you at any time. If you can get your wealth into something that cannot be repatriated, like real estate in the United States, where the rule of law is a lot more sound, that's why you see a lot of these people in foreign countries coming over, buying up these luxurious properties in places like New York, really well established, San Francisco, places like that, as a way to preserve wealth. They're not buying it to speculate. They're not buying it clearly for the income. They're just buying it to have some place to put wealth that cannot be taken back. And so I looked at that and said, wow, now you combine the the ability of blockchain to be able to get the wealth out of the country and then put it into real estate in a place like the United States. I think you're onto something, Michael. And so tell me, when you're out there talking to other people, not just that, hey, they see blockchain as the future, but are you seeing people excited about the ability to move wealth out of one area into a place like the United States and United States real estate?
I have seen people in from Europe because the rates of return there are extremely low. And we were just, like I said, over in Dubai, and so I we really got some good traction with African countries and also Middle Eastern countries, because they just want to like get into something a little bit more stable. And for example, Dubai is a fantastic country, but there's so much construction going on there, and it's so easy to do construction that the prices, every once in a while, like there's like 50 cranes in the air right now, and so prices on residential real estate are in a collapse again. So they just and then the other thing that we've seen is cryptocurrency owners that have gotten a bunch of gains and want to take some of those gains off the table, are looking at our product and saying, well, this is something that I can get regular cash flow that's backed by an asset that hopefully is not going to be shooting up and down, and it's going to be non-correlated with the stock market, and it's going to be non-correlated with,
Stable.
yes,
It's going
yes,
to be more stable.
yes, yeah.
Yeah. Okay, well, so then I think that, the reason we wanted to do this is to kind of keep people up to date. There's going to be people that are smart like you that see it and understand it. There's going to be people that are slow like me that are taking a while to understand it, and probably a whole bunch of people in between. But I think this is an important kind of developing niche to pay attention to because, I look at things kind of from the big picture. That's why sometimes I get lost in the weeds. But clearly, I see that real estate as a investment compared to paper assets like stocks and bonds is really in a position of advantage right now, notwithstanding the fact that the powers that be are pumping a lot of funny money into the stock market to create faux prosperity. But those same people are also pumping money into real estate through buying mortgage-backed securities and have a lot of incentive to keep real estate prices up because they make loans against those and those bonds that they're so fond of, that they're pushing the interest rates down. If rates were to go up, they would collapse. Well, rates go up when the bid goes down, and the bid goes down when bonds start to default. So if you start seeing a bunch of commercial mortgage-backed security defaults, which are probable in the environment we're in, then I think you're going to see the Fed and other central banks stepping in to prop those markets up, just like they did the residential mortgage-backed securities in 2008. So I think there's going to be a lot of money in the space. That's my point, and a lot of pressure to keep bond yields down. So if you're a poor investor out there looking for something relatively safe and secure to get a yield on, income producing real estate, or even mortgages, private mortgages backing that income producing real estate, are probably going to be attractive. And then the question is, well, gee, how do you do that? You could buy a REIT, or you could do something like what you're doing. So you took the concept of a syndication where you pool a bunch of other people's money together to go out and purchase a portfolio of properties, in your case, stabilized single tenant, triple net lease retail with essential businesses that are more likely to survive if there are additional or continued lockdowns. Good balance sheets, good history of payment, good credit, good business models. And you're providing them a stream of income backed by a real asset, the property, that they can purchase instead of buying shares, private placement shares. They're buying these tokens on the blockchain. But at the end of the day, they're basically buying real estate. They're just using blockchain technology to do that. Am I kind of getting that right?
That's correct. So I'm going to back up a little bit and latch on to something you said. You said I'm a little late to the party. We're very early to this party. So this party is just getting started.
Well, the
So
blockchain party, I'm late
yeah,
to. The real
so,
estate of the
but
blockchain party, I feel like, okay, burn
yeah,
me once, shame on me, right? Or shame
yeah,
on
but
you, right? Yeah.
you are right at the
I'm
very
paying attention this time.
yeah. You're surfing the wave right now.
Yeah.
So and then the other thing is it is exactly like a syndication because it's a 506D regulated security from the SEC, and it's regulated in the European Union under their laws that you need to be an experienced investor, and with us you need to be an accredited investor. So it's almost exactly the same as a normal syndication. This gives you just extra optionality. So after a 1 year lockup period, if you decided that you wanted to put your money into a multifamily investment, or you wanted to put your money into like a distressed hotel investment and say, I'm going to roll the dice on that, you've got the opportunity to go peer to peer, like me and you could, just trade, a few shares, or they could list them with a broker, or they could list them on an exchange. And then the other really cool thing is that you can invest in dollars. And if you're concerned about the dollars, you can take your money out in euro, yen, or ether.
Right. So this one's huge too. We were talking about this before the recording went on. And one of my favorite things about gold is it's like home base. If you're
Right.
concerned about all these currencies and all the printing and which one's falling and currency wars, if you've read Jim Rickards, and you're like,
Right.
I don't know which currency I should be in besides the one I'm in if I want to diversify. Well, if you go into gold, you can trade gold for any currency in the world. And what I hear you saying is, this thing is similar to that, meaning that you can come out of the dollar, park your wealth in this token backed by real estate, and then at whatever point in time you want out, you don't have to sell or settle that transaction in dollars. You can settle in whatever currency you want, which means you have people all over the world potentially able to buy that from you or trade on that. Is that, and how does that work in the secondary market, Michael? I
Well,
mean,
and that's also, you can also take your distributions in another currency too. So you can invest in dollars and then take your distributions out in euro or yen or and I believe there might even be a gold stable coin option that you can, take your distributions out in that. And
okay.
then in the secondary market, on the secondary market, the SEC has ruled that you don't need to be an accredited investor to then buy into the shares.
Really?
Yes. So we're still confirming that,
Yeah.
but our attorneys, we've had a number of really smart attorneys, and they've told us that the SEC allows the secondary transfer to a non-accredited investor.
Well, okay. It just sounds like it keeps getting better and better. Obviously, there's a lot to learn here. I know we had you put together, you came on the radio show and did the radio show. So we put the link to that down below. You wrote a special report on the topic for us that people can get. What's the name of the report again, Michael?
The report is Blockchain Investing 2020, or sorry, Real Estate Blockchain Investing 2020.
Okay, so it's kind of a primer on just kind of how all this works and what you're doing. So if you're interested in that, token at realestateguysradio.com, just send your email request to token at realestateguysradio.com. We'll get that to you. And then just stay tuned, right? Because we'll have you back on the show, and in between we'll bring back and do these videos whenever, when something comes up, when something changes, when you learn something. But this is something I'm paying a lot of attention to. I didn't pay enough attention to Bitcoin because I didn't get it. I kind of just sloughed it off. Candidly, I understand Bitcoin better. I understand the pros. I still see some cons, but I see this as something that kind of addresses a lot of those cons. And I think for the same reason that Bitcoin kind of had a hot run there, I think this thing could even be hotter because again, I just feel like right now what's happening in the world and the economy and the financial system is going to end up being favorable to real estate. I'm not saying real estate isn't going to go through a rough patch, but that's a great opportunity. In fact, we were on a call the other day. We were recording with George Gammon from Rebel Capitalist.
Sure.
And George was telling us, oh, have you seen what's going on in Dubai? Dubai, the prices are terrible. I'm going there to look for deals.
Yes, yeah, and I'm thinking about buying a house there too, because you show up with cash, it's 40% off.
Yeah. So, there's always going to be great opportunities when there's a lot of chaos, and we're standing on the threshold of a lot of chaos. But in that chaos, people are going to be looking for stability. And, you think what you want about the United States, but when you put us on a global stage and you look at our real estate and our rule of law and our real estate property ownership rights, we're at the top of the heap. People all over the world would rather have their wealth in United States real estate. I mean, we may not be number one in all categories, but we're way up there. And so you marry that to this technology and the safety and stability it brings, and some of the abilities to pivot into different currencies and trade in the secondary market. I mean, there's a lot here to study, to learn, to kind of get familiar with. And we're very much on the front end of it. So I think it's going to develop. I'm excited for you, Michael. Congratulations. Any closing thoughts?
Yeah, I just want to say that I was at the Create Your Future. I'm going to give a shameless plug here. The Create Your Future conference in January, and I don't think you guys explain that well enough because it's just phenomenal. It's the only time I've ever done a goal setting retreat where the stuff was just pulled out of me effortlessly. And so, it's the first time in my life I was able to, cement a mission statement. But part of my mission statement was, through the blockchain technology, this could create, mass wealth. So we had, billions of people within the last 30 years coming out of poverty, and now those people are in the middle class. So we've got, all over the world, somebody on their phone can now invest and create wealth, in really small increments and get into super stable stuff. So
Yeah, for 60,
I,
70 years, right? United States citizens have been investing in the stock market to build wealth.
right.
Now the entire world can invest in real estate
Right.
uh, with just as much convenience. So in a lot of ways, it's a real game changer. And again, I just not sure everybody, I know I didn't, and I'm just beginning to understand how significant what you guys are working on has a potential to become.
And I'm just going to go one further, or other assets like oil. I mean, I met a guy from Canada last week that he's doing, natural gas and Bitcoin mining, and so he's got the tangible assets. But this could be just as easily done with oil and gas. We know of an NBA player that monetized and tokenized a portion of his contract, so you could buy a bond based on his contract. And that's a token now that you could invest in. It's just, incredible. All these different assets, are just going to be available worldwide.
Well, it's a fun time to be an investor. A lot of chaos, a lot of opportunity, a lot of change, a lot of innovation. I love it when a guy with 30 years of experience in old school real estate finds a way to leap onto the 21st century blockchain technology train and combine the two, and then open up from regional markets to global markets, just like boom.
Yeah.
So congratulations, Michael. Always fun talking with you. I always learn something. You stretch me, and keep us updated, will you?
Thanks again, Russ. I
All right.
really appreciate the time.
Thank you.